But Gautam Duggad is here with us to talk more about earnings picture and earnings season and valuation. Gautam, good afternoon. Thank you so much for your time. Now, Motilal Oswal strategy report is something which almost the entire market watches out for very closely. You guys go deep into numbers and valuations picture. There's a lot of talk in the market right now on valuations front. How are you looking at the Nifty earnings picture, the Nifty EPS for that matter, for this year, next year, even say 1 year ahead? What kind of EPS, Nifty EPS are we talking about? The way this quarter is poised in your view, last quarter was, has there been material improvement?
Hey Ajay, good afternoon. So as far as earnings are concerned, Ajay, you would have noticed that after 5 consecutive years of earnings downgrade, last quarter was the first quarter where we have seen a beat in earnings, and then the first earnings upgrade after many, many years. I remember we had upgraded earnings by 9% at the end of second quarter result season in October, November. And as we step into this third quarter, when we released our preview 10 days back, we had again upgraded numbers by 3 to 4%. So between the 2 quarters, we have now seen a 12% earnings upgrade on Nifty for FY21 and 22. As far as EPS is concerned, we are right now at 516 rupees for FY21. This number was 454 at the bottom in March, April. So from there, we have come to 516. And if we indeed deliver this number, it will be a growth of 11%, which will be the highest in the last 5 or 6 years. In a year which has been ravaged by pandemic and lockdown, and we have seen so many challenges. But the growth in earnings for Nifty FY21 will still be higher than the previous 4 or 5 years. As far as FY22 is concerned, that is where the expectations are running very high. So we are right now at around 700 rupees for FY22, which will be a growth of more than 30% from where we will end in FY21. So clearly earnings expectations are very high now, corroborated by upbeat management commentary on demand in multiple sectors, improvement in asset quality, or rather so to say, the fears on restructuring as far as BFSI sector is concerned, and that's a big one because it is roughly 40% of the index. Those fears have not materialized, fortunately. And at the margin, we are seeing that the drivers of earnings are turning cyclical. So, for example, in this quarter, we are expecting almost 80% of incremental YOY earnings growth to come from metals and cement. And to touch on your point on valuations, yes, they have run up from 17, 18 times. We are right now at 21 times on FY21 earnings and 17 times on FY22. Clearly, these are not cheap valuations. They are factoring in a lot of improvement in earnings ahead. But if you go back into the previous cycles, you will always find that at the beginning of an earnings upcycle, when markets turn, the near-term valuations always look juicy. The question is, how much belief is there in this earnings improvement over the next 2 or 3 years? If these earnings materialize, clearly we have a lot more to look forward to over the next 2 or 3 years. Having said that, in the short term, it's very difficult to predict. Things will depend on how the result season proceeds and what commentary we get. And then, of course, the big event is ahead of us on 1st of February.
Sure. Gautam, where exactly are you witnessing highest earnings delta out of all the sectors that you track? If you could speak about some large companies for indicative purposes. Over the next 2 to 3 years, where is the biggest delta coming in terms of earnings is concerned? And how much of that is the street already pricing in?
Sure. So number one, obviously, it's going to be BFSI, which is financials. We have seen earnings improve from 90,000 crores for our Nifty BFSI universe to around 110,000 crores for FY21. And the expectations of FY22 is 150,000 crores. And given that it is a large part of the index, it ends up being the primary driver of the earnings growth. Things are turning around for auto. If I give you a picture of FY18, that was the peak year of earnings for auto when the Nifty Auto Universe did an earnings of 30,000 crores. From there, it's been a 3 years of downward journey, and we are ending FY21 maybe with 10 or 11,000 crores. Things are expected to go back to 30,000 crore in FY22. And lastly, the third biggest driver of earnings is oil and gas. Primarily Reliance, you can say, where we are expecting earnings to move to 120,000 crores in Nifty oil and gas from 80,000 crores in FY21. It looks very high, but remember that it had already done a lakh crore of earnings 2 years back. So these are the 3 big sectors where incremental earnings delta is expected to accrue from. Among the stable sectors, tech is continuing to do very well, which remains one of our most favorite sectors. Worked is very well for us in model portfolio. We are still running a 300 bits overweight. There we are expecting FY22 earnings to pick up led by TCS and Infosys, which will be a 16-17% growth. And then things like consumer and healthcare are expected to do 14 to 15% earnings growth in FY22. So big delta from auto, BFSI, and oil and gas. As far as stocks are concerned, clearly our preferences in BFSI remains quite stable throughout the last 8 or 9 months. We think HDFC Bank can remain the core part of the portfolio along with Kotak Bank. But the real spice will come when you see corporate banks showing improvement or rather further improvement in their asset quality. And given where they are sitting on provisioning coverage ratios of 70 to 85%, the room for earnings upgrade remains quite high out there. So those are 3 or 4 sectors where we're expecting FY22 earnings to see material improvement.
Right. Gautam, how are you analyzing the broader markets and what themes, because you have a very big universe, though we have only spoken about the index reflection right now in terms of earnings and valuation. When one really sees your strategy report, it's a massive document. You cover such a lot of broader market companies as well. If you could throw us and share some names or themes in the broader market universe where you are witnessing good demand, durable demand, pricing power coming back, margin profile improving, and hence your clients are discussing around those kind of names or sectors or themes.
Sure. In the broader markets, Ajay, over the last 2 months, I have noticed one very important change in the behavior of our clients. The amount of queries or discussions that we are having on cyclical sector in the last 2 months, I haven't had this for last 4 years. So what we like, or rather where the earnings are going to be strong and commentary is going to improve further, one is cement, which is benefiting from multiple themes, housing theme, infrastructure theme. People do expect the fiscal spending to get a leg up in the budget. So cement becomes a natural beneficiary of all of these sub-themes. What we like in cement is Ultratech, JK Cement, and Dalmia Bharat. The other important cyclical sector, which is not a large part of index and contribute more to the broader market, is metals. For the last 3 or 4 years, metal stocks had gone nowhere, so earnings has also not gone anywhere. But now we are expecting earnings to pick up substantially starting 2H FY21. Last 6 months, we have seen a rally in underlying commodity prices of rebar or HRC prices. So my analyst would have upgraded the earnings 3 or 4 times in metal stock in the last 4 months. So that is one important sector where earnings are picking up. What do we like there? We like Hindalco and JSPL. Aside of this, Ajay, it's a mix of multiple other themes. But the biggest underlying or overarching theme in India right now is that the consolidation of market share in favor of bigger players or branded organized players in every segment you can talk about, whether it is consumer staple, consumer durable, even BFSI, and for that matter, even IT is witnessing that. I mean, vendor consolidation is a very important topic right now in IT sector over the last 1 year post-pandemic. And then, of course, as I said, without repeating it, BFSI remains at the forefront of the big theme of financialization of savings. And within BFSI, while traditional lenders are very well known, but non-lending financials are seeing a lot of improvement, whether it is insurance, whether it is, companies which are a play on capital markets. So those are things which are improving. And then lastly, of course, consumption remains an evergreen theme in India. If urban demand were to improve in 2021, I think a lot of this discretionary consumer stocks or consumer staple stocks which are a play on urban markets can continue to do well. What we like out there has remained constant for the last 4 or 5 years. Names like Lever, Titan, Britannia, Pidilite, and maybe Tata Consumer. So those are some of themes which are right now, doing quite well. But yes, I mean, if I were to summarize it in one line, cyclicals are something which are receiving a lot of attention over the last 2 or 3 months.
Why have we not? Right. Gautam, you've seen, several cycles and have worked numbers both behind the cycle as well as ahead of the cycle. Which cycle are you seeing playing out this time compared to many previous cycles which you may have seen? How does earnings upgrades and earnings delivery, move in tandem with the market? Whenever a big earnings upgrade cycle comes in, how does next 2-3 year after that market moves in your view? Or do you think market preempts all of that and runs away ahead of the actual delivery? So that one can get a sense where are we on the cycle right now?
Sure, Ajay. Tempting as it may sound, one does want to compare this with the 2003 or 8 cycle, but numbers belie that because 2003 to 8 was a very different period. We have seen 25% earnings CAGR in that 5-year period. Global markets were buoyant. Everything was working well. Fiscal consolidation was also happening and government was also spending on investments and consumption was also doing well. So that was an ideal period as far as cycle is concerned. I think as far as cycles are concerned, not just in India, if you look at other markets also, one thing which is very important to note is each cycle is different and each cycle brings to fore its own set of winners and losers. If you look at 2003 to 8, we used to talk a lot about infra names, construction names and power and all. Those all sectors are nowhere to be seen today, right? Today we are talking about, the beneficiaries of PLI, the consumption theme, the broadening of the financialization of savings. So as far as cycles are concerned, I think this cycle will also bring its own set of beneficiaries. And of course, there will also be a set of losers. Clearly, one of the themes that I think will remain prevalent even throughout the next decade is the big becoming bigger and, concentration of market share and profit pool in favor of big guys in every sector which is there. So that I think is a very important and a very big theme to play out. As far as valuations in a cycle are concerned, I think, Ajay, it's fair to expect that when you start an earnings upcycle, markets obviously tend to be slightly ahead of the actual reality. And then in an environment like this, where there's a glut of global liquidity and interest rates are lower, not just in global markets, but even in India, then obviously the markets will try and run ahead of itself. But that's a hazard that you have to contend with, in a sort of a bull market where earnings upgrades are happening after a long time, where expectations are getting reset. And to add to that, we have just seen beginning of vaccination, which we were just talking about before this show began. So I think it is tough to pinpoint a finger and say, these are the valuations where I will buy and these are the valuations where I will sell. The point is you have to have a basket of stocks across sectors where you think earnings visibility is going to be high and where you think the market is willing to, ascribe a slightly higher multiple than what is present currently. And so that is where you make bulk of the money in a bull cycle or in an earnings upgrade cycle. Combination of earnings upgrade plus re-rating. And that is where that's why I've mentioned those sectors, repetitively, BFSI, consumption, IT, and some of the cyclicals to add spice to the portfolio. Yes, valuations, obviously, you have to think twice before looking at any stock in today's environment. Unless and until you're very confident about earnings visibility, paying such high multiples will prevent a good compounding over the next 3 or 5 years.
Right. All right, Gautam. We'll let you go on that one. Thanks so much for joining us with your thoughts. Always enjoyed chatting with you. That was Gautam Duggad talking about earnings and which are the sectors, what kind of earnings are they likely to see, and moreover, how's market actually pricing all of that in. Time for a short break. More news and analysis on the other side of the break. Don't go anywhere.